Hey everyone, thanks for joining us on another edition of the weekly brainstorm. I see some familiar faces. I see a fair number of new faces as well, which is great to see. Let me try and just take you through quickly about what the weekly brainstorm is about and what we do here. Typically, in the weekly brainstorm, we have one startup share what they're building, right? They take maybe about 10 minutes to share what they're building, some of their key challenges that they're facing, or what they want to brainstorm about, right? And then we as a founder community tend to try and become a part of that, just become CEOs of that startup just for the next 30 minutes, right? I think that's what we're looking for. You are CEO, you are founder now. If you were in the place of that founder, what would you do to help the startup succeed, right? I mean, what are those steps that you would take? So it's just a collective thought process. There is no right or wrong answer in a brainstorm. We have heard very wacky suggestions coming in. So and it's welcome, right? Because what we are trying to figure out is, in like a really concentrated 1 hour uh, time frame, can the founder just get like diverse viewpoints from everywhere, right? I mean, that's roundabout it. That's what the objective is. Today we have a super exciting startup, VCard.ai. I mean, this made a fair bit of progress already, and I think I'm both interested in knowing what Vishal has built and what his thought process was, and I think that itself will be enriching for this community. And then hopefully we can play a part in kind of his journey and see if we can just kickstart it all or just accelerate it a bit with some of our thoughts, right? I think that's what we're looking at. For all of you who want to know how this whole thing works, just as Vishal is taking you through what they're doing, if you have any suggestions or you have questions, just add it to the chat, right? I'll keep looking at it, and I will even invite people over to have direct conversations with Vishal basis this whatever I see as your question, right? So as long as if it's a simple thing, I may ask it myself. If it feels like, hey, there are several layers under it, then I will pull you up and try and help get you to explain what your thought process is to Vishal himself, right? Vishal, that's roundabout it from my side. I'm going to kind of hand it over to you to take stage, share a bit about VCard and more, right? Yeah.
Fantastic, Ishwar, and Vince. Thanks a lot for giving me the stage. There, I think the way you have put together is the best way. That it's not about what I am thinking or doing, but if all of us were together as a board or a community CEO, what are the top 5 things that we should be picking up right away? And if we can get something interesting in the next hour or so, I think it will be a fantastic weekend started too. So what I've done here is a very quick presentation. It's not more than 10 minutes kind of stuff, and you'd possibly recognize it. It's almost the PPT that you present for your investor decks, etc. But what I will be doing is to very quickly take us through the story, take us through what is the use cases we are solving, how does it stand in the market, what is the end state we are chasing, how do I make revenues, so that we not only react on the product possibly in any journey. It's a possibly just a it's a start point. It goes, let's not react only on the product but also on the path and the go to market and the overall business model is what we'll possibly react on. So very quickly, is my screen visible, Isha?
Yeah, we can see it.
Good.
Yeah. For those who want to, it's best to do a full screen on this, right? Then you can see it better, So there's an option for full screen. So just go ahead and use it. You'll be able to see it better. Yeah.
Perfect. So very quickly, VCard, as it says, is India's first mobile-first credit card which uses UPI for fund transfer. And the easiest definition that of our product comes from our customers who say that, okay, they compete it with a Google Pay, Phone Pay equivalent, and then say, okay, those are UPI products, but more like a debit card from me. So if I were to make a payment from Ishwar to me, Ishwar's bank account, HDFC account gets debited. Here they get 30 days to make a repayment, exactly what you do in a credit card. But what it becomes more interesting is because you're doing in a credit card environment on a UPI, tons of new use cases have come in, especially now in the COVID stage. Not only that people are spending 40 rupees for buying bread in the morning or 4,000 rupees for fuel in the petrol pump. but they're also paying 40,000 rent in the evening, or they're paying the school fees for whatever 60,000-70,000 rupees, or to the parents in their hometown. So those are kind of use cases you typically won't be doing with your credit card. Credit card was never meant to pay a rent. So that is, and from our side, because the acceptance network is like 100 times more than the master visa world, especially if you look into the P2P side, it creates new opportunities in terms of how you can think and use about a credit card. Very quick 2 lines about who we are, what we are doing. So myself and Arvind go back since 2007. This is my fourth venture, and including the one of them in which we grew a company through public listed journey, in which this particular company moved from an 8 rupees share price to 150 rupees share price over four and a half years. I have done IT products in healthcare. I have done IT services in the US. I have personally built physical hospitals, 3 physical hospitals in Hyderabad, adding up to 800 beds. We are now in most of the specialities, would be like the top 5 in Hyderabad. So that has gone on well for some time. So now, specifically to the opportunity on point, I think post the famous 8/11 gold, disruption, if we say, there are 2 things that were fairly visible for all in the fintech world. Lending part obviously kick-started in many strong tailwinds, and on the payment side, the wallets and the UPI and the Google Pays, etc. And now the WhatsApp UPI sitting in, you are possibly seeing a fair amount of activity there. One industry which was on the cusp of both lending and payment, which is basically the credit card, that never saw any major volume growth, especially when we are talking about hardly 40 million credit cards owners compared to 900 million debit cards. It created a fair amount of an opportunity for us to see. We had been doing some fintech lending in the US, so we understood this industry a bit, but I went and spoke personally to at least 40-45 CXOs of banks and NBFCs. And what we heard was almost a similar refrain coming from the fact that it's a very expensive business to do. What it means is that it's the fellow who was standing at the airport in those good days pre-COVID to sell you a credit card or calling you on the phone. That guy gets anything between 7,000 to 8,000 rupees, or lowest maybe 5,000 rupees to get a card in your hand. So if a business with $100 CAC, only few customers justify the LTV on that. Similarly, if you talk about the kind of customer service that is required in this business, it's a very high touch, high involvement one. Contrast it with a personal loan or a home loan. In 25 years of home loan, you would be possibly calling the bank 5 times for an interest certificate. Here, every month a bill has to be generated. There are reward points to be given, merchant disputes, identity theft, and blah blah. So you need 1,000 people call center to run that show and make it possibly these two still, origination and service, I would still go ahead and do it in the traditional way. Where what they call is a camel on the back in the world is on the very, very high or very, very expensive small ticket collection. If I were to go to Guwahati and collect a car loan for 5 lakh rupees, I'll go with police and repossess the car. But if some smart guy sitting in Thane has not paid 2,000 rupees on a credit card bill, from Lower Parel, you can send an SMS, you can make a call, you will not send a fellow to collect. So that way, the business itself became expensive. On the merchant side, obviously, there's a 2% kind of an MDR. On the customer side, there has hardly been an innovations. So this was an industry which we found, because of the low penetration and its general cost structure, ripe for disruption. So what we have done here is essentially build 2 product lines. There's a UPI-based credit card and a UPI-based credit line, in which we are doing the originations simply because it's a mobile phone. You can do originations at 1/10 or maybe 1/100th the cost at certain scale. The moment you are doing a chatbot-based kind of a customer support, you can get away with the entire call center cost. We are right now managing with 2 people for a 10,000 customer base, compared to 1,000 people call center for Andhra Bank for hardly like 80,000 customers. So that kind of operating cost and the small ticket collection, now that is something which was we did a lot in the US, but essentially what it comes down to the way here is rather than waiting for a default to happen, because it's a mobile phone, because it's a credit card, you get tons of lead indicators before a default happens. So normally in a personal loan or a home loan, only on the 3rd or the 5th of the month when the EMI does not reach you, then the shit hits the fan and people start calling and the guy is not reachable and so on and so forth. Here we do a fair means I won't start jargonizing with machine learning, etc. But basically, we create customer cohorts of green, yellow, red, etc. and try to identify those customers who normally used to get their salary by 5th, and now they're possibly getting by 20th of the month, or they used to buy their grocery by 10th of the month and have not bought grocery even now, or things like that, and start building those cohort in terms of spend behavior, location behavior. The fellow was traveling much more, now is not traveling, and so on and so forth. So even before a delinquency has happened, we start doing predictions, and those we saw very good output in this COVID time, where we predicted which kind of customers will be availing of a moratorium, and we were able to get some good success there. We'll talk about the rest. So essentially what we talked about in the cost efficiencies because of the zero MDR UPI payments, instant origination on eKYC, OKYC kind of a model. Now we are putting video KYC, so you can originate it much faster. And thereafter, what we are talking about to identify this entire customer risks through what we have a trademark, tool which we actually developed in my earlier foray in the US business for called TCI, Tensor Credibility Index, which at its peak had digested and analyzed around 25 million subprime customers in the US. So when I say subprime customers, these are people who are less than 500 FICO, and consider that we are actually now a global market leader in that ERP in the US for that matter. So this gives you tons of alternate credit metrics by which you can work on that part. So essentially what the product does very simply is that, it is almost a single session origination. Normally credit cards take 15 days to 30 days to apply. Here what we are doing is that you then and there can complete your application. If your Aadhaar address is same as your OKYC kind of thing, you can get immediately onboarded. If I can do a video KYC, good. If not, possibly I'll send a fellow to do a biometric and move further. One of the other important part which I'd possibly like you to just take a note here, especially when we talk about the competition in a moment, is we have chosen very consciously to identify ourselves as a credit card guy than the credit guy. And the nuance comes here that the moment you talk, I'm a credit guy or I'm a loan guy, people start associating with, there are tons of lending companies, very well-respected companies there. But in that space, good or bad, lending continues to be seen as a distress product. At this point of time, if I had to offer issuer, say, a personal loan at 1%, why should I take a personal loan? But if I give you a credit card, you're already carrying 3 plastic, and hey, there's a 4th one, which is a mobile app. You don't need to carry a plastic, and you can make a UPI payment and tons of use case. Doesn't hurt, I will take it. And hence, if you see the product UI, in fact, we did a complete UX change 3 months back after some amount of traction and the customer feedback. The intent was that let the customer not only use the credit part of the limit, but make it for the UPI payment. As you're seeing, you are also seeing transactions around, budgets, merchant offers, reminders, group purchases, so on and so forth. So bring the credit card bells and whistles right at the front, while the dashboards and analytics on the top of it. While there is a loan, there is something that you can convert to EMI. You can make, if you are short on cash, you can use it. Same as UPI is same as cash for you. So that way it becomes a branding as well as a customer acquisition positioning that we are doing. And what you're seeing, the kind of analytics, the kind of customer offers. In fact, what we are doing in this fashion here is to give the customer an experience of exactly what a credit card app should be. And if you see your ICICI credit card or HDFC credit card app, etc., which is all of them are reasonably good apps, but almost all of those apps, at best you can do is a reward point status or a bill repayment, or very exotic touch part of it. Now they're saying you can hard code a Google Pay into a tap and pay model, and then that becomes a mobile phone. But essentially they're not mobile first identities. They are a plastic card which is trying to be managed on a mobile app. So that is how this becomes a kind of a customer experience wise significantly different, because plastic for me is not even needed. It's incidental if at all you want it. We went to that journey and we found something interesting. So obviously there was a, we went live in October last year. So we have like just 1 year plus kind of in our journey. Obviously we lost 6 months of COVID part, so we did not do any business there. But what we saw in that period of time was that while the cost efficiency opportunity was almost on the face, There were new pieces on the business model that were getting visible. So you can't take the cost structure of a mobile phone and put a revenue model of a traditional conventional plastic world. So what is the revenue model in a credit card? If you see the SBI kind of annual reports, half of their revenues are coming from MDRs, or another 40% is coming from rollover income. So if a fellow is paying 50% interest in this kind of an environment, either is lazy or foolish or both, because he can get an interest possibly 15% EMI product at almost instant clicks there. Similarly, MDR was very good when the merchants were possibly seeing value of a credit card customer coming in. Now merchants are saying I can get a UPI for free, I can get a RuPay for free. They are asking Paytm, why should I pay 3.5% to you? So we believe that those revenue models will also possibly get to be relooked at. So that's how the two products of credit card and credit line comes in. In credit line, there is an interest bearing product, so we make money on the interest. In credit card, we also push a MasterCard kind of a product, in which we also make some origination and on the per transaction kind of a small money is there. Similarly, if you talk about the other elements of customer gratification, means 30 years back when Diners Club came to India, they continue to say that I'll give you offers in these 4 or 5 restaurants. Right now, Yes Bank came with a new card saying I'll give you offers in these 4 or 5 restaurants. They have been so commoditized that the exotic reward point is the only way that I'll give you 2x, 3x reward points, but you spend 1 lakh rupee, you'll get 1,000 points. With those 1,000 points, you need to have 5,000 to buy a t-shirt on West Side on a Wednesday. Instead, right now, VCard already has the ability to know that, okay, Vishal used to travel to Bangalore, say, twice a month, and rather than giving him a spam offer, a reward offer, give him 2 Make My Trips offer. The moment he lands, give him a Bangalore taxi kind of a discount voucher. And when he's on the way, then say these are the 4 restaurants in which you can get a 1+1 beer free in BTM. So that kind of a personalization is not possible in a plastic card at all, because they does not know that you have moved from Hyderabad to Bangalore for that matter. Similarly, if you see this kind of a product, because it's not a distressed product, it is still seen as an aspirational product. The number of customers who have asked for it, to give a simple number, around 20 crore PAN numbers applied for a credit card between 2017 to 2019. The number of new credit card owners grew by 1 crore. So 19 crore people wanted a card, did not get it. Compare that, say, so then what happens, you can start pushing it not only on Facebook and Google and the usual digital channels, you can push it through multiple ecosystem partnerships, you can push it through a B2B2C channel partners. In fact, right now we have close to 300 brick and mortar physical channel partners, people like insurance agents, tax advisors, chartered accountants, GST filing guys, so who have been in that financial industry, and they say that, boss, every card I make 200, 300, 400 rupees. So even if he's making 400 rupees at the top and gets 25 customers in a month, he gets 10,000 rupees of it. And the sell is very easy. Hey, I go to Vijayawada, I don't need to say that your card is better than, ICICI or HDFC. I say that, boss, you don't get a card, I'm giving you a card. And you don't need to do an interest rate comparison and those kinds. So that is the broad canvas of things we are doing. At this point of time, we are adding multiple functionalities on the product side. We are also in the middle of a kind of a fundraise. We have got some commitments. We are, in fact, we have put around close to 2.5 million already into the business through some seed funds plus my own capacity. And essentially what we are looking to do is to scale up. So incidentally, just touched upon the revenue model. We'll possibly speak more in the Q&A. Incidentally, right now, my per card economics is positive. So what is happening is that for every card that I get, I am making around 200, 300 rupees on day one. Normally in the digital world, you pay for the CAC and the LTV comes much later. In our case, what we have done is, because there's a UPI credit card and a credit line together, what happens here is, I'll possibly anticipate the question and answer in 2 minutes. So what happens is that we are live with RBL Bank. So RBL Bank says that, hey, Vishal, if you're originating UPI credit cards, let me push my MasterCard also with you. Perfect. So now MasterCard, they were used to pay $100 or 2,000, 3,000 rupees, whatever is the amount they used to, their minimum they used to pay. So they say that at least that 2,000 rupees I can pay to you because you're also helping me push my MasterCard. So far, so good. So then what happens? and since my origination cost, good or bad, never exceeds 300 rupees, etc., so we are able to create a margin, means even with a conversion cost, etc., of around 300 to 500 minimum, maybe even 800 rupees on every card that I get from UPI credit card. Now, in general, what happens is that if you are an Amex bank guy or another guy, the rest of the people who applied to you, normally it is a 5 to 10% approval rate. So I'm getting, say, if 50,000 applications a month, I would be giving not more than 2,000 cards in a month, or 2,000, 3,000 cards a month. What happens to the rest of the 48,000 customers? So instead of letting those guys go away, I push an interest-bearing credit line to them. So that is the UPI credit line. That is exactly the same product, same merchant offer, same UI, UX, all the functionality, except that instead of 30 days interest free, there is a kind of a small interest of 0.1% per day, which is the market rates right now. So essentially, if they spend 10,000 rupees, they have an interest fee or a finance charge or convenience charge of around 100 rupees. So now what has happened is, for the entire 50,000 customers, I have 10% of them coming through credit card. The LTV is paid, my CAC is paid for the entire funnel, and I enjoy the LTV on the credit line business. So I'll possibly stop the at least the initial business model here and open the discussion for questions.
I'm still probably a little curious about how you make money on everything. So basically, you're saying because you've got the customer already to accept a mobile credit line, there are banks who are willing to give them a physical credit card as well, and they're willing to pay you for that acquisition.
Because there's an inefficiency there. They had been used to paying 5,000-7,000 rupees, happy to share 2,000 with me. So now funnel of 8,000 whatever 50,000 applications is funded well enough. So normally, any digital world, you have to pay to have a customer. Now somebody else is paying for it.
Got it. No, super. I mean, that's like really kick-ass that you're able to acquire and then sell the same customer for a physical card, and therefore make money on it as well, right? But one question that I have for you, is this meant to be an independent credit card company, for example, right? Mobile credit card company, or are you also going to power mobile credit card lines for, let's say, banks? Right.
So that's a fantastic question, because we have got flavors of that discussion. One part of people like some small banks, again, here possibly like I'm just throwing a name, but say a bank like Ujjivan Bank, they do not have a credit card, and they don't intend to invest into building that expensive credit card, because they say, unless I have 1 million customers, it does not make sense to build that book. There's loan book bhi hardly banta. So what they're saying that, and their target customers are such who will not be eligible for the regular, credit card program. But they say that, hey, Vishal, can I ride on your UPI credit line program and run my credit card program? So in that way, it becomes a B2B2C channel for me. And it might not necessarily be a white label product. It will be a VCard, powered by Ujjivan Bank. So the loan book will continue with the lender. Neither now nor in the future we intend to be lenders. We are technology guys. The rest of it is something which we want to create the leverage. But there are more than enough lenders for whom, because for them, I'm solving the problem of customer acquisition. I'm solving the service collection, everything. So they are more than happy to gravitate.
No, makes a lot of sense. I'm just going to pull up Chakradhar on stage. I think he wants to share a few thoughts with you. Yeah.
Hi, Vishal. Really excited to hear this. I got my first credit card in '87, and I think I made 20% of my salary or stipend from reward points on the credit.
Wow.
So anyway, there are lots of things I can see possibilities which I will share offline. But one or two quick questions. Do you see linking it to self-help groups so that you don't have collection problems? And one thing I don't see companies doing well is dealing with both their knowledgeable customers and difficult customers. The extreme ones are very important. And one, I think it's becoming my USP in Unsolved is there is always a social emotional angle to everything, which we are not leveraging enough. So any thoughts or comments would be interesting.
Sure. So, in fact, I'll possibly take the second question first because clearly you are on the knowledgeable and the customer who shouldn't. I'll answer it. In fact, why I'm taking the second question first is also it solves the way we want to do the business. Or possibly when I said the entire Mastercard Visa has done in since '87, I don't think you would have seen a massive business model innovation. What we are looking here is they continue to charge the unsuspecting fellow a 50% rate, right? So what I'm trying to do here is, and if you look in this fashion, maybe it overlaps to your third question also. I am assuming that it's a matter of time that financial literacy becomes better. And rather than that, we are waiting for the industry. We want to be the guy who delivers that financial literacy. You would be surprised the number of customers who have reached out to saying that, oh, I thought minimum amount due was same as EMI, so I kept paying the minimum amount due. And then he's in a big financial mess. So what we are trying to do here is to reach out to the customer. Rather, my business model is not to charge the 50%. So I would rather be on the customer side and give him options, saying that, hey, why don't you convert into an EMI? Why do you want to screw yourself in that? Or even if you're not paying, say, 3,000 rupees के लिए तुम अपना credit score खराब कर रहे हो. That is a much easier sell than sending a fellow and or harassing him there. So that is the idea which I'm talking for knowledgeable or those pieces here. This is also a bigger challenge in terms of the customer service element. When I'm saying chatbot, it is not just the form factor part of it. It's also the customer experience. You are in the middle of a transaction and your card is stopped and you have to press 1, 2, 30 and listen to 30 minutes. Nobody likes it. So what I'm trying to put across is that get that, and here also the standardization of commentary, because we have seen credit card companies, telling few things, delivering something different. In a chatbot, it is already documented for you. You don't need to access the recording of the conversation. It's there on your WhatsApp. So you know that it was promised that I will be waiving off your annual fee. So that's a record for you. So the knowledgeable guy is more confident chatting than waiting to an agent who don't know what it. And the more we are able to, again, it's a journey, but at some point of time when the bot gets, need not depend on the individual's intelligence. This is the good part in credit card. There are 10 questions, they have 10 answers. You don't need to say, Siri, tell me a joke, right? There are always 10 scenarios to solve. So that is the problem we are looking to solve. So I think that covers the second and the third part in some fashion. The first and third are also having an overlap. The self-help groups, as you talked about, and the emotional part of it. I genuinely believe before even we started the business, कि boss आज की तारीख में एक आदमी इसका ड्राइविंग लाइसेंस है वो ओला चला के भी 2,000 रुपए तो मिनिमम अमाउंट ड्यू दे सकता है. Why can't he have a credit card? So if you talk to an RBL or an Amex or यार जब तक उसको 2 लाख की लिमिट नहीं देते मेरा इकोनॉमिक्स काम नहीं करता. क्यों? Because your economics is screwed. What I'm saying is at this point of time I can give a 10,000 rupees limit. Whether you can originate service and collect quickly, that is your problem, not the customer's problem. And hence, the moment you bring your costs down and hence new customer segments come in, additional new channels of GTM comes into picture. I don't need to stand at the airport to sell. I can actually get to a self-help group. I can get to those bulk customers. I'm saying insurance agent kind of issue. You never thought an insurance agent will sell a credit card because uske liye, it was always super premium one-to-one convincing sell. और sell क्या कर रहा था? Reward points sell कर रहा था. मैं 3x SBI. I don't want you to sell that. Simple बोलो कि यार भाई तुम्हारे पास 50,000 का लिमिट है, तुम्हारा महीना का निकल जाएगा. So that possibly covers the second.
Fantastic. I think as you go into more AI ML,
yes,
the social emotional cues you will get on that, I think will be very interesting to follow through. I'll share offline, but I think now since morning and after listening to you, I feel India's prospects have increased by 50% in my own estimation. तो बहुत बढ़िया, बहुत मजा है. अभी तो I think you have got one more evangelizer for you.
I'm so glad to have that, Chandrasekhar. Thanks, Chandrasekhar.
All the best.
Thank you so much. Thank you so much, Chakradhar. Hey guys, so yeah, so a few things, Vishal. What I want to try and do as well. Of course, there's a brainstorming component to this, right? George, do you just want to come up? I see a fairly long question. If you can raise your hand, it will be kind of efficient. Question Karan is asking is what is the effort in onboarding? Is it frictionless? Can I just download the app and get started? Is that it?
So there is friction right now, but we are improving to give an answer. When I started, it was 20 days. Now it is 2 days. By end of this year, it will be 15 minutes. So
Got
what
it.
I'm trying to, and it's more because of the banking partner. So because they have to send a Mastercard with it, so they are sticking with their Mastercard processes. So when I move to the UPI credit line, I don't have a dependency on Mastercard. So I'm actually originating the customer in session. Plus, there are KYC rules which are creating friction at times. But okay, one question that is implicit into this is directionally the regulations are going in a way where it will become instantaneous. So my one of the pitch was that in those days we are doing a flip word on a wallet saying that forgot the wallet, forget the wallet. So you don't need to carry a wallet. If you're in a restaurant, you have forgotten the wallet, you should be able to download the app, get the approval, make a payment and walk out. So that is the product journey we are chasing. Possibly we'll be there by January or maximum by the March period.
Got it, got it, got it. No, that's cool. I mean, even 2 days I think is quite efficient compared to the
What it
world
used
we
to be. Yeah.
live in. Of course, we also have parallel products which are all instant. So yeah, I
Yes, I am.
mean,
Yeah, we are
yeah,
going in. I think we are using a similar technology stack just because I have to lean on the bank. So there are things that you cannot always short circuit.
makes sense, makes sense, makes sense. Is there any connection with the CIBIL score of an individual or something of that sort? How
Yes.
do you
So
determine?
so as of now, that instant decision that you, so what will happen is you will, whether you'll get the card or not, that is instantaneous. You will just go to the web browser or the app, and it takes not more than 30 seconds for you to give basic information. We do a bureau head and find out whether you will get it or not. So you don't need to wait for 2 days. Only when you're approved, the process takes 2 days. So that is the way. So we do a bureau check, especially now when you're going the credit line side, which is mostly a near prime kind of a customer segment. So bureau is our first way to go in. We also have abilities to look into the bank statements if you are giving me a Yardley Perfios kind of an access. So there are ways to collect more information over and above credit score. But honestly, I'll use the word it's a journey. Means it's not just going to be a number and I'll pick it up.
Got it, got it, got it. No, I think so. Of course, I think CIBIL score itself is kind of, I don't know. I mean, they don't really have too much data going into it. I mean, it's not intelligent enough, right? Let's say it that way. I mean, if someone has like paid off like all, like I actually had my CIBIL score like affected because apparently the bank had forgotten to say that the last installment was paid, right? And I'm like, what the heck is this is going on? And even if that is the case, right? If I've not paid my last installment, dude, I paid all of the other installments. How can my CIBIL score be affected,
So
right?
I bureau is in the want of nothing else. People use bureau,
Yeah.
but the way we are seeing, at least in the next 12 months for sure, bureau will be not more than 20% of your decision criteria.
I think it's a good question. So I'm going to try and take questions one by one. Of course, folks, you can come up. Karan, I think that question with cred may be an interesting one, right? I mean, if you want to just come up, and chat about that. There's one other question from George. Unfortunately, I don't think he's coming in from maybe he's not from a laptop, but I'll ask it on his behalf, right? What percentage of folks do you see defaulting, and what happens if they default? I mean, like, is this just written off because of the size of money or what?
Yes, so
How
in
do
the
you see it?
credit card world, means the tolerable default they say is 2 to 3%. If you are an Amex Citibank guy, it could be as low as 1%. If it's an RBL thing, they are okay with 2 to 3%. When I go to the credit line program, our arithmetic starts getting screwed beyond 10%. So I can take a 10% kind of a cost, but essentially it's not always write off. That is something which is important to understand. If you are looking into as a personal loan, 1 lakh rupee loan or home loan or something like that, car loan, they say that means 80% of your defaults happen in the first three installments. So you will know whether the guy will pay or not. If he's able to pay the first three installments, then it normally continues. So your capital at risk is much higher. Here, if I give you 1 lakh limit, essentially in the first month, you actually use only a little bit. You don't want to use a lot of it. So you end up using maybe only 5%, 10% of that. And then you get into a repeat payment behavior, repayment behavior. So while the default may be 10%, the principal loss is slightly lower than the traditional lending process. But our arithmetics are right now geared around 10% kind of a default for the credit program. Yeah.
Got it. Yeah, Karan, you wanted to just come up? Yeah.
Yes. First of all, excellent presentation, Vishal. I'm honestly amazed. If I had funds, I would have invested in you. So,
Okay, so I have to solve that question. That is my problem to solve now.
yes. So I hope I'll be able to get some credit from you and reinvest in your company.
That is goes without saying. So fantastic.
The thing is that I was just worried that right now you're saying that it is in the process of being regulated and the technology is easy to implement. So now, like easy in terms of machine learning and also developers are available. But when it comes to the reduction of the hassles that the big companies are facing in terms of acquisition of the customers and providing the physical collection services and distribution of plastic cards. So the companies which are fintech first, such as Cred, they have the data for our credit card expenditure, the thing that you have mentioned that you'll be doing. They have the spending behavior, the location, the reward point system, and also that which credit cards are you using. And in case if they pivot or they add the features of including your own credit card in your system, then how would it be different and how are we supposed to defend against them?
So I think that is the whatever the $1 billion question that we our investors should also keep asking, that people, one, believe that there is a low entry barrier, and second, a corollary to that is it's also such a well funded and well watched industry. That's what I could explain to you in 10 minutes. Obviously there are people who are doing it in much more detail, so people are expecting the big boys are coming soon, and what is your chance to fight against it? In fact, a lot of those small ticket check size that people who would love to invest, they say that boss, mera 2 million to chala jayega, aur tumko 50 million chahiye. So that is the kind of a discussion. But I'll qualify that understanding with 3-4 things. Yes, it will be a big boy business, but even in the end state, it will not be a winner takes all market. It's not Uber or it's not a Flipkart story that you will not have to. You even now carry 3 credit cards. You like to have more limits. US में लोग 8 7 credit card रखते हैं. So that is one way to possibly skirt the question. But let us take the question head on. While the technology of UPI transfer means there is a reason possibly that we are still the only UPI credit card in the country, despite we being in the market or being visible for almost 2 years. And FPL is one of the one card guys who have just launched with Matrix Ecoa behind it, and they took 1 year to get the product live, and that too on a Visa stack. The reason is, if I'm debiting your money and pushing it to issuer, the APIs for that has been published by NPCI. You can't do anything more about it. It just has to be done the same way. The moment you go into a credit card, you end up, in fact, the glamour part was you're doing a credit card which is not Master Visa. The bad part was you ended up doing every single thing that Master Visa does. So hence, there's a lot of things under the hood in terms of whether you say security side of it, authorization side of it, how do you manage chargebacks, etc. And since our platform, when you go to a bank, when you go to an RBL kind of a part, they won't take a risk just because an entrepreneur is excited about the product. They have to do exactly the same checklist of items which you are doing with your MasterCard. And hence, it took us 1.5 years, effectively 2 years to get the product live from RBL. So what I'm trying to put across that, yes, a Cred may choose to pivot. Paytm has already announced, those guys will do it. So there will be a kind, but it's still not that today Paytm decides that in 3 months it will be live. It will still take 6 months. But I'll also answer 2 other parts to it. Technology cannot be your end state mode. Technology, I may take 1 year head start, others may take 2 months, 6 months head start. They have distribution advantage. They will have more money. Where it will work better is how you do your underwriting. Where it will work better is how do you do your per card economics. Right. So far, I am being able to sit together with a MasterCard program. There is somebody who's funding my funnel. So for Cred, which is possibly spending 15,000 rupees to acquire a CAC customer by showing Govinda, in our case, there is somebody else who's paying for me. So even at a million card level, obviously they have more money and they can keep burning it. But at a scale, I will be making money every card that I sell. They'll be burning money every time they sell. Similarly, if you talk about the market channels, cred continues to be, you're targeting the top 1 crore customers, basically the fellow who are 800 FICO or equivalent of those 750 FICO and above. My immediate target customer is the fellow who does not get a customer, does not get a card. So essentially there is a nuance, and I think almost all business, the devil lies in the detail. But almost on each of those items, on technology, GTM, product identity, who do you want to sell to, how do you want to sell to, we are trying to stand alone. But yes, there's technically nothing stops to Google to do everything. Google can do it, all of that.
So I have one more question, that right now all your things are dependent on MasterCard in terms of the revenue as of now.
No, so my CAC is funded by the MasterCard,
right.
but the credit line is an interest-bearing product. So they spend, say, 10,000 rupees, I make 100 rupees out of it. So the more they spend, I make more money.
But in case your CAC is dependent on MasterCard, so in that condition, MasterCard is open to collaborate with other people as well. That's what my concern is.
And it is difficult. I know, and this is somewhere I can, maybe we being the first one, it took us 2 years. Even the next one will take 1 year. The third one will possibly take 7 months. It's not trivial. Because how many banks, I'll tell you, if you go to an ICICI and say, I want to do it, and even if you are on Paytm to talk about with SBI, think of those bankers who have learned and done the business in a certain way on MasterCard. They don't even know what is under the hood. They just say, ki boss, main yahan input dabata hu, ya output aata hai. Now they have to re-engineer. We ended up re-engineering every single component of that MasterCard engine. And which is slightly difficult. Means again, not to say it can't be done, but it's difficult.
So just to take from you that right now you have taken 2 years to reach this far. If you were to do it again, considering all the knowledge that you have gained in the last 2 years, how much time would you require to build it all again up from scratch?
I will not waste time with 40 banks and NBFCs. That was a big dump. So that is something which, and maybe there's no better way to know. Until you meet people, then you don't know who will work. So we went to all the big banks, all the small banks, and understandably they were arrogant to say who you are and how can you talk of a credit card which is not Master Visa. So I think that journey I will short circuit. So that time wasted will be short circuited. I may also consider having a very strong, close NBFC with me so that I have an access to fund. So right now we have solved that. Earlier, my NBFCs were much more transactional in relationship. So to the customer who I want to lend, I can't lend because they are not allowing me to lend. So that is one of the, so rejection ratios became big. So obviously I'm smarter with those 2 years of learning, but I couldn't think of any better way to do it at that time.
No problem. And this last question is that right now, that do you also plan to pivot or expand into becoming an NBFC of your own, probably, or somewhere competing with Visa and MasterCard in terms of providing different banks solutions that, okay, if you want a card, it will be either Visa card or a MasterCard or a VCard.
Yes. So if you ask me, means being an NBFC does allow you to create better strategic growth. You can reach out to those customers like self-help group as we spoke about. But if you ask me, as a DNA, we are more technology guys than a lending guys. So we would rather have a very hard-bound relationships with NBFCs. And it is also kind of that quote-unquote a cliche, but to say Uberization of credit card, that I don't want to own the car. I don't want to own the loan book. So that is the reason why we won't do. If at all we have to pivot, if at all we have to go more, we will possibly do that white labeling, become the B2B, the under the hood for banks. There is a huge opportunity in the international market. We have got inbound inquiries from Africa, from Singapore, from US. So those are the places where I would rather spend more of my effort than try to build a loan book. That's the thought process, at least.
Okay, and just out of curiosity, are you planning to get acquired by one of these players such as Paytm, MasterCard, or people, or are you planning to scale it up and compete with them?
If you ask me, means will a million card customer, a million card portfolio 2 years down the line be available for acquisition, or will be attracted for acquisition? Obviously, yes, will be 2 times size of Yes Bank. In fact, when I went to ICICI, they said, "Boss, tum bana lo, hum tumko acquire kar lenge," rather than part. So that story is there. But these are kind of things that you decide when the pieces come in. But honestly, I am super convinced on only one line. There has been a way in which Master Visa has done business for 70 years. There is an opportunity to redo it. Means whether we succeed or fail, the fact that I can always keep saying I was the first one who took the punt saying that the mobile credit card should not be this way, but should be like this way. So that is the question I'm trying to solve. So that is, And entrepreneur का journey is the more fun. Destination कहाँ पहुँचेंगे देखेंगे.
Awesome. Hey, thanks. A question that Ravi has is on the card acquisition side of things. Is Bank Bazaar also solving this for
Discovery,
banks?
yeah.
Yeah. And is that cost
So,
effective as well?
so if you ask me, Bank Bazaar equivalents are obviously marketplace, but they are essentially making money on the lead generation story. And more important means, so unless you do the entire journey of customer acquisition, customer service, customer collection, you will not find that one-to-one comparison. And even in the end state, we don't intend to be a marketplace. I will not say that, hey, you can have an RBL bank, ICICI, HDFC. We may have 2 banks, 3 NBFCs. The intent is, we should be able to cover every customer who comes to me. My golden state would be that whoever comes gets at least 10,000 limit, does not go away, because that is my cost of doing business. So that is why I will do it. But Bank Bazaar means I don't see that as an immediate, like-to-like comparison.
So, just one thing that I would like to brainstorm on, just from what you said, right? You said that this is not necessarily a winner takes all market, but what would it be necessary to do to make it one where you are the winner takes all, right? You have early mover
I think
advantage. Yeah.
So obviously this is a big boy game also because of the fund, because the go-to market, the market size is so huge. You are selling an aspirational product, not a distressed sale and all of that. So the one who reaches the finish line faster, if at the correct place, correct time, Paytm did it, MobiKwik did not do it. So that kind of thought is also there. But I also believe genuinely a good product will sell here. A good product, because you people will not take your card. People will take your card and a Google card and a phone pay or so on and so forth and compare. So if your product is good,
I think the question that I'm trying to drive at, I get what you mean, right? That people, it's like VCs at some level, right? I mean, you have 100 more, they will always have people reaching out for investment, right? So as many people are willing to give you money, there are people who are willing to take. But I think the question that I'm trying to look at is that you have an early mover advantage. How do you scale faster, like really fast? Is there a way, like one of the things that I'm thinking right now, and actually I'll come to, there are some suggestions on your onboarding. It feels a little inefficient. A lot of people are getting errors. So Chakradhar was trying to get on board, right? But your onboarding was causing issues. Right. But I think the critical thing that I'm trying to wonder is, how does one user of your product get you more users? Like, let's say just by the fact of using your credit card, is it possible to acquire more users? Like, let's say to pay the person money, let's say if he has to download something, I don't know, right? I don't know what the answer really is, and I'm kind of throwing it open as well to folks, because this is one of the critical things. Like, let's say InstaMojo, the primary reason they grew was because as soon as I need to collect money, I share a link, and then the person who's received it, like, hey, this is an easy way to collect money, right? So therefore, I'll share a link as well, right? I mean, of course, payments is still a
we
tough
need to
business,
build those levers.
So
We are. Yep.
but I feel like somewhere they're solving for that, where one user brings you more users is a critical piece in this puzzle from a growth standpoint. Of course, after you solve onboarding and things like that, perhaps, right? But
So in fact, we are cognizant of that issue, because this is a story. As I say, if I'm betting so hard on the product being good, the best testimony of the product is that referral channel. So I cannot say that referral will be not a meaningful way. One of the places where we are trying to build those, as of now, plugins, we'll see more action here, is on the merchant side of it. So we have a specific piece which is, we call it internally as a process anti-nearby. So anti-nearby, what it means is that rather than you going to the merchants and merchants giving you offers, you can do that group buying. So here what we do is, on every Wednesday, I send you one notification. What's the plan for weekend? At that point of time, now it's a very high intent purchase, in which you say that this weekend I want to go for a movie, I want to go for a restaurant, something like that. And then with my network, I can go back to a barbecue nation and say, hey, there are 50 people who are looking for a buffet. Can you give me a 1+1 free or something like that? This is also an element of a networking thing. So you need not be on a VCard app, but you could still participate in that group buying. And when you say, okay, VCard ki wajah se because of the group buying component of it, I was able to get 50% off or 1+1 off on a Barbecue Nation. I would like to participate. So what I'm trying to say, there are some plugins, but this requires a certain critical mass. Right now, we are too early in our journey to go to a Barbecue Nation and give them a
So
good offer.
one question that I have here, when I use a credit card to pay, is there a way for you to control the message the receiver gets where it says, hey, paid via mobile credit card?
We have done, in fact, we are doing it just now also, but the scalability of this business was also, means we had that one. In fact, if you ask me a credit card, how did Master Visa become big? They control the acceptance network. We took a choice that I don't want to touch the acceptance network. I don't want to touch the merchant. I don't want to go and acquire even one merchant because merchant expensive होता है. तो हम लोगों के केस में I don't want a dependency on the acceptance. आप parent को दे रहे हो, landlord को दे रहे हो, grocery को दे रहे हो, but yes, I still send a message I give a message to the customer. If I don't know the receiver's mobile number, I have no way to send you a message. But the guy who's making a payment sends a confirmation message कि भाई पैसा मिल गया क्या, तो वो जो भेज रहा है हमारे PDF से भेज रहा है. So we are doing a bunch of it. Some of them are working, some of them will ultimately.
I think that opportunity may be there once he's asking for that confirmation. It's like how Hotmail did it, right? There, get your own free Hotmail email account. So can you leverage that every time a payment is made? Then I think you would have solved your acquisition problem as well, because now every time a payment is made, your brand is going out, right?
Thank you. Yes, I'm looking to push that.
Cool, awesome. I'm just pulling George up on stage, and then that'll be the last one, folks. This is how the brainstorm sessions go. Sometimes structured, sometimes unstructured, whatever. Sometimes we just love what they're doing, but objective is to try and figure out how can they become huge fairly quickly, right? So George, hey, welcome.
Yeah.
Please do share your thoughts with Vishal.
Hi. Hi. Can you guys hear me?
Yeah.
Okay, great. So, Vishal, awesome product first. I mean, it's a great innovation. So, VCard, does it stand for Vishal Card? Is that
I wish so. I'm getting a trademark on that so we can use it the way we like it. But it's actually a virtual card. But essentially, people know the credit card word. So instead of credit card, if you get a VCard, so people are able to relate it to that.
Nice. See, I like the fact that you're going to a market which is inherently there, right? Because people always need credit, to grow the business or whatever. And the whole business model of existing cards are, I'll be very choosy on who I want to give it to. You're going the other way around. You're saying everybody's welcome, right? Everybody's welcome, and so what you're inherently doing is you're opening up the whole the ecosystem and getting more people in. So acquisition costs will definitely come down. My only thing is in case of defaults, right? Because people will be spread across a lot of other smaller towns and stuff. Won't your cost there be a little high? That's my only thing. Well, it's a great product.
You're right on that, George, and that's why we have to be prudent on how you want to go. Technically, I told you I was running a hospital. We still run a fairly large hospital. If I stand off the hospital and say, "Hey, I'm giving you money," there'll be a queue in front of us. That's where the lenders with whom we work are still prudent. In fact, if you see right now, our rejection rates are actually more than your plastic card. RBL normally would be approving 10 to 15%. Because VCard is new, they're approving 5 to 10%. And we are okay with it because I don't want my lenders to lose money. If they lose money, this program goes for a toss. And even when I don't want to be an NBFC myself, but I have to think like an NBFC. I have to ensure that they have a good quality profitability. Collections, I can help them. Support, I can help them. So as I go beyond the traditional customer segments, you can keep taking a slice, learn it, improve, take slice, learn it, improve. Since the technology and the tickets is the much more data available, you can have acceptable defaults. You'll not have 3% defaults. You'll have 10% defaults. But that is how I'm looking to build the arithmetic.
Awesome. Yeah, because if you can solve for that, right, I think a lot of other things, chips will fall in place. Because
absolutely,
a lot of times that's the biggest.
And lenders will be happy to come in because for them, I'm giving them a customer service collection and a profitability almost assured. People have asked for FLDG and all. It's the same thought process. So money will not be a problem. Market is not a problem. Technology is what we have to bring them together.
Right. Awesome. All the best, Vishal. All the best.
Thanks, Josh. In fact, George, one question that I'll possibly leave behind is because these are in the early days, and if you can possibly send me some DMs or on the
Sure.
Unsolved portal itself. These are early days. We have done some collateral, some of the Facebook messages. We have got some good engagement installs are going. I am right now looking to build a journey in which the product is seen trustworthy. I'm finding issue from customers who believe we are fake app had data because we are rejecting a lot, right? So if you go to our Google Play Store, we will be getting like 2.5, 3, in fact, 3 kind of a star rating. And it's not because the product is bad, because those who are using it don't rate. Those who are getting rejected get upset. So that will stay forever. But if you, and I don't have the money like a cred to, build that brand persona that people say, oh, this is a bigger company doing it. So what I'm trying to do here is also to run campaigns, run channels, do some basic PR, get evangelists like Chakradai, etc., who can possibly build that word around that this is a thing to stay. This is something which at least is trying to make a dent in the sky some fashion. So it's not just the ad or the collateral that I'm talking about, but overall that messaging is what I'm trying to fine tune as we move forward.
I think what you need to make is try to have people who are regular everyday people, right? Instead of having a Govinda for a cred, like right? Have a regular, like say regular vendor,
kind of thing.
like somebody who's a Dunzo employee, right? Asking for a loan. Or it could be a small flower shop vendor. Because those are the guys who you're targeting. And the fact that they'll be super happy because so far, whenever they go to a bank, they'll be like, please stand in the line or stand outside. I'm not even bothered. You're saying you're welcome, man. I'm willing to give you $10,000 loan as long as you give a basic repayment. I'm sure they're super happy. They'll be happy. The fact that you need to show that this is a product that is for the mass and it's not for the class.
Yes.
That distinction you need to make.
Absolutely.
That is, straight off the cuff, I could tell you that. That's something that you could.
Hey, that's a super kick-ass suggestion. I can just kind of visualize some of those
for everybody. I think I like that thought process which you had put in. Let me put some action items and get back to the team that this is what we discussed and this is what we have achieved, and let's see what some will work, some will not. We'll see.
Super. Okay, Vishal. All the best.
So I'm going to call the brainstorm to an end. Of course, we continue conversation on the tables. Right. Thanks so much. This is how the brainstorms happen. Just a little bit of for those who are still not completely familiar with Unsolved, this is pretty much what we do in a written form on the website. Founders leave suggestions for other founders. They share challenges that they're facing. Right. And just share. Of course, not every suggestion is necessarily going to add value. Sometimes you reject it. But the point is there's a counterpoint of view, someone else thinking on behalf of you just for those few minutes, right? It adds a lot of value to the founder. Actually, I will let Vishal talk about.
I agree. In fact, this hour, is it well spent? Of course, it's great. Simply because it helps me a clarity in my thought process. Plus, what is it that it makes for my sounding? You guys are pretty much the sounding board, and what is it that is resonating with you? Makes a lot more sense. And when you talk to external guys, investors, or people with different agenda, partners or lenders, they're judging you. They are there to evaluate you. Here, at least I know what is the sounding board sounding like. So that is very important. And I think the couple of suggestions. One, at the payment side, let the message go through it. And on terms of the branding side, what just George talked about, I think these are very easily actionable. Within 2 weeks, I can possibly come back and say, this is what we are getting out of it.
It would be really awesome if you added that update in 2 weeks.
Yes, I will. You will get to know whether it worked or not.
Okay, super awesome. Okay, we'll take a break. We'll probably join you at the tables for a bit as well. Yeah, just take a break.